Hello guys, in this video we are going to discuss about FIIs. So many of you have the confusion that what it's all about when we discuss about FIIs. They are coming to India, they are investing in India. What is quantitative easing which is happening in US and money is pumped in India, and what is quantitative tapering, right? The Fed tapering and money is sucked out from India. Why rupee depreciation is affecting the FIIs and why they are selling now. So all of you have this confusion and I'll tell you how all is it done and why FIIs are coming to India, why they are investing in India, why they are selling now in India, and how they invest in India, what is their modus of operandi. And forget about India, we will talk about FII investment cycle across the emerging markets, right? So historically, if you see, it's like Brazil, China, Taiwan, South Korea, and India. So before we understand the Indian context, we'll fully understand what is the FII psychology, the investment cycle, and we will also understand why FIIs move capital cyclically, and we will also try to understand what is the cycle all about, and why AI related themes are attracting massive global flows at this moment, and then why India is still structurally strong despite FIIs are continuously selling. I think it's almost 2 lakh crore FIIs has been sold for the last 1.5 years, okay, or more than that. So the objective of this session is basically to understand the global capital movement and macro cycles, the risk concentration, and also long-term structural investing. So it will be slightly academic and some of you might not find it interesting. So I'll tell you in the beginning itself, it's kind of academic video. So those who have interest in understanding these, you can watch the video. Others, we have enough live trading video, technical analysis videos and everything in the channel. You can go through that. But this is something which is academic, and if you have that mindset, then only you will be able to understand and appreciate also. So see, FII flows, that you need to understand most importantly that it's cyclical. It's not like, like this one line like this, okay? And it will be theme based and it is macro driven. So money is actually flowing into economies with strong themes, and the money is out when the growth slows of that economy, or inflation rises, or when the currency weakens. What is the present problem that we are facing? The weakness of Indian rupee, the rupee depreciation. From in the last 1 year itself, we have lost almost 12 to 15%. So that much will be the effective loss of FIIs just in terms of currency depreciation. Forget about what they earn or lose in the market, what they earn or lose in terms of the taxes. Here itself, automatically this loss will be there for them. And also the money will be out when better themes emerge elsewhere. So is there any other better opportunities as well? So let's start with Brazil cycle. 2003 to 2010. That was when massive FII inflow came to Brazil, right? So this Brazil have seen huge FII inflow, and allocation came from 4% to 16%. And the main reason was China's industrialization boom. So there was a massive demand for raw materials and commodities, and Brazil, of course, became a major beneficiary. And then what happened? This allocation, which came to 16%, that have collapsed to 3%, and that came in the last 15 years from 2010, I think now 2026. So this is mainly because of recession which is happening, and then the corruption scandals, and then the persistent double-digit inflation is also an issue, and then the currency was also weakening. So just keep these points in mind, because I'm going to connect all these with what is actually happening in India and what potentially can happen in future also. So inflation plus currency weakness are extremely important variables for FIIs, because currency weakness directly affect their loss, right? And inflation also. And then after that, Asia's rising allocation is something which you need to see. Asian markets have gained larger, allocation after that. MSCI EM Asia, if you see, 55.7% in 2009, and it became 80% by 2025. And of course, the large part went to China. And if you look at the China cycle, the allocation have increased from 17% to 43%. And that's a massive institutional allocation which has occurred. And see, China historically was not the best stock market in terms of return, but China received huge allocation mainly because the EM capital shifted from Brazil and other economies. And what changed after 2020? See, starting from October 2020, especially after COVID, money started leaving China. The reasons, mainly the government intervention, especially in the tech sector and the property sector, and the geopolitical premium also faded. So the risk perception is also increased. And if you look at the current allocation in China, it have reached to 43 and came to now 19%. So if you make a comparison, India is not the only country that is seeing forex outflow. The FII outflow, forex outflow is different, FII outflow is different. Even when FII withdraw, that is a forex outflow, right? But FIA and forex is different. When you buy something from outside, also there is a forex outflow. So see, China is also experiencing large outflows. Brazil have experienced the same thing. And if you look at Taiwan, in 2000s, Taiwan had around 16% allocation, that the largest weight in MSCI EM at that time. And if you see, the Taiwan story today is completely depending upon TSMC, right? TSMC alone represent around 14% of MSCI EM. And India's entire allocation, if you see, that's around 12%. What does that mean? One stock outweighs India's country allocation. Now, there is a concentration risk also here that, there is an extreme concentration is something which we can visualize here, right? So the entire EM passive funds are indirectly taking huge exposure to TSMC. And why Taiwan is outperformed? It is not because of domestic economy. It's not because of consumption issue. It's not because of monetary policy, but mainly because the AI semiconductor dominance. Now, what are the structural risk in Taiwan? If military tension rise, China as a threat, and semiconductor leadership change, then the entire allocation narrative become vulnerable. Now coming to South Korea cycle. South Korea current rally revolves around SK Hynix and Samsung. So AI supply chain is showing that importance, right? SK Hynix dominate high bandwidth memory HBM, and which is used heavily in NVIDIA Blackwell GPUs. And there is a high risk here, right? That is NVIDIA changes its architecture. If NVIDIA change something, then HBM demand will reduce, then the structural AI monopoly narrative may weaken. So if you see, semiconductor monopolies are rarely permanent, always that you need to keep in mind. And always there is an AI bubble discussion which is going on. So characteristics currently, if you see, resemble a kind of bubble behavior. If you look at what is actually happening. So there is a massive capital concentration and extreme momentum is what you see in these sectors, and the global capital also chasing the limited themes. So the bubble can continue for maybe 6 months, 12 months, maybe even longer. And during this period, the prices may double, triple. It can move irrationally higher than what we think or even can believe. And bubble like behavior will be very clearly visible. Now, let's talk about India cycle now. So we have seen long-term structural rise. India allocation was around 3.5% in 2000, and when it comes to 2024, it's around 20%. Now, we need to see why India re-rated. There are structural reasons, macroeconomic stability, because we have a stable government now, and digital public infrastructure is better. Manufacturing push is there, right? Yeah, there is a policy, I forgot this name. Then financialization, digital economy, domestic liquidity strength, and all these are looking good. Then why outflow happened? The main reason, AI trade is becoming more dominant. Capital shifted towards Taiwan, Korea, and US AI stocks. So here, what happened is, that's what I mean by kind of cycle also, capital shift also. And valuation ran ahead of earnings, especially if you see that during 2024, when Nifty touched 26,300 level, valuations was at the peak. And most importantly, rupee weakness. Currency depreciation completely damaged the investor sentiment. And there are but we have good achievement also, like India avoided double-digit inflation, and it is very critical. Inflation is stable. Why it matters? If India had high inflation and high oil price, and then economic damage would be very severe, but that's actually not happening. And also SIP flows have changed the market structure. If you look at, there is a strong structural transformation, and monthly SIP inflows itself is 19,000, 21,000 crore. The earlier situation, it was like, you know even 1 billion FII outflows there, it could crash the market heavily. But today, if you see FII selling 5,000 crore, DII is buying more than that, 6,000, 7,000. FII is selling 7,000 crore, DII is buying 10,000 crore. That's the scenario. So the domestic liquidity, the DIIs and the mutual funds and the SIPs are absorbing that massive FII selling pressure every day. There is no scenario where you are getting, this kind of dip, right? So see, FII definitely need the domestic liquidity, and that's there now. And FIIs definitely need DIIs to buy. That is which is going on. Retail participation. Otherwise, they cannot exit efficiently. Now they got efficient and very good exits also, right? And they are confident that they can exit also. So the Indian market is giving that confidence to them. So they can easily come back if they want, because there is always retailers who have money, who's having trust in market and investing in market through SIPs, through mutual funds, through DIAs. So see, ultimately what market require buyer and seller, both are essential. Now imagine FII is coming and buying heavy. If there is no one to buy back again later when they want to sell, then they'll be in trouble, but that's not the situation now. So if you see the current situation, India have no direct AI mega theme exposure, right? At the same time, if you look at Taiwan or Korea or US tech are receiving massive flows because of this. And India also seeing IT sector's weakness. The IT sector is underperforming, and majority of the IT stocks, even Infosys, TCS, and all these Wipro, fresh lows, 3-year, 4-year lows. The reason is the AI transition concern is there, the market perception, and people don't want to invest also now. And there are leadership criticisms as well. But the most important problem, the major concern is, you know, rupee depreciation. That is actually now the damaging the sentiment. If you see earlier crisis during 2008, 2013 time, at that time, rupee went from 45 to 60, right? And if you look at the current phase, from post-COVID, 2021 to now, if you see, rupee went from 74, 70 level to 97 also. So that is something, you know, a crisis situation. But there are positive factors. If you look at India's growth, that remained reasonable. Inflation relatively under control, and RBI is decreasing the interest rate. Forex reserve is also strong, 600, 700 billion. Fiscal deficit is manageable, though deficit is there, that is manageable. But current account deficit, it is manageable at this point of time. But if the crude price is going up and if this war persists for slightly one more year, if that happens, then the current account deficit will be under trouble. Otherwise, the factors that FIIs look at, growth, fine, inflation, fine. So FIIs pullback happens when growth slows or inflation rises. That both are fine. Forex reserve is also there. Fiscal deficit and current account deficit is also manageable. And the FII, DIA participation is there. Retailers participation is there. They can exit also at any point of time, give a fair exit as well. But the biggest concern is growth is there, but there is a slight slowdown, right? But not necessarily inflation, but growth is slightly slowing down. And if you look at the global economic context, if AI trade is excluded, global economy itself is looking weaker. So what we see is very much offshoot of what is actually happening in the world, right? Now, because of weak monsoon that we are expecting this year, there is a possibility of high inflation in the coming days. And also because of the high crude oil prices, there is a possibility of high inflation because of this war if it is not getting settled. That threat is also there. Otherwise, things are looking fine. And see, the thing is that Warren Buffett principle, be fearful when others are greedy and be greedy when others are fearful. So if you look at this AI theme observation, the entire world is rushing towards one dominant theme, and that itself becomes a warning sign, right? Entire money is flowing there. It is looking like a bubble. It is doubling, tripling, and that itself is actually a warning sign. So again, if you look at US story, it's highly concentrated around three areas: AI, technology, and semiconductors. If you look at India's story, it's a broad-based economy. It's not that concentrated. It's demographics, if you see broad-based, consumption-based, financial services, infrastructure, defense, energy, real estate, manufacturing, capital market, and it's broad-based economy. So if you see long-term Indian theme, if I want to discuss the major structural themes, okay, financialization, defense, capital markets, power and transmission, EV transition, urbanization, consumption growth. So We have seen 2000, 1999, 2000, there was an internet bubble, and Nasdaq have stagnated near 10 years afterward. Even though internet itself survived and expanded, but Nasdaq almost stagnated. So that's something which we need to keep in mind. So a strong technology theme does not always guarantee strong stock returns forever, right? That investor psychology, that's very important. Modern investors, what they want, they are looking for instant gratification, you, me, everyone, and quick returns. But wealth is created over a period of time. Wealth creation is long term. And also, this social media effect is there. That's a big negativity, right? Social media also amplifying the negativity, not the positivity, fear, FOMO. That is when people get the reach also, and the short term thinking. So now, if you ask me what is working for India, the positive factors I've already discussed. Growth is fine, inflation is fine, current account deficit, fiscal deficit is fine. We are able to manage things, and retail participation. If you come to the stock market, it is good. Multi-decade domestic growth story. If you see, that's also looking good. Consumption-based economy, which is good. Demand is always there. There is no need to create fresh demand. New age business, entrepreneurial ecosystem, everything is looking good. What is not working? There is no AI leadership. The valuation concern definitely is there in some areas. And at this point of time, because of rupee weakness and some other concerns, there are some weak sentiment and the taxation concerns like this short-term capital gain tax, securities transaction tax, long-term capital gains tax. So, see, retail investors supporting the market, but at the same time, policies also should encourage participation. Right. So at this point of time, India is a multi-decade structural story. Short-term underperformance, we may see, we have seen before, we have seen the recovery also, but that does not invalidate the long-term fundamentals. These are cycles, and the cycles are temporary. FII behavior is cyclical, and that means it's temporary. Capital eventually rotates. Sometimes it will flow out, but when there it get exhausted, it will come back, right? So, see, for a while, India may underperform, at least in AI, because of this AI mania continuing because of that. But after this AI excess, if that normalize, then attention may again back to diversified economies like India. So understand the cycle. So you don't want to be panic. If you're an investor, keep invested. Avoid chasing momentum blindly and focus on structural trends. Risk management is more important than any kind of hype, and diversification matters. Long-term wealth creation is definitely need some patience, and wealth is created long term. It is not that quick. Okay, so guys, emerging market allocations are cyclical. That means FII's behavior are cyclical. AI is currently dominating the global flows, the money, right? So India is temporarily out of favor in relative terms because we are not good in AI. We are not dominating there. But structurally, if you see, India remains diversified, demographically strong, and consumption driven. So, and also financially deepening. So short-term sentiment may be negative, but I still feel strong long-term structural opportunity over there, right? So these are the things that I want to discuss. I hope you understood and you got some clarity about FIIs. See you in the next video.